The president is calling the people who control your interest rate political. He wants them gone. If that fight goes his way, your mortgage, your credit card, your auto loan, all of it moves. Not eventually, fast. I build financial models for a living. Let's look at what's actually at stake before this week's meeting in Jackson Hole. System 1. The Independence Firewall. The Federal Reserve was built in 1913 with one job split into two parts: keep prices stable and keep employment strong. To do that job, its governors serve 14-year terms, staggered so no single president appoints a full board. That structure wasn't an accident. It was built specifically so interest rate decisions could be made on economic data, not on an election calendar. The president does appoint the chair. That part of the system is political by design. But the day-to-day rate decisions are supposed to run through a committee, not a single office. That's the firewall. And right now, it's the exact thing being tested. System number 2, the political rate cut risk. This isn't a new fight. In the early 1970s, Fed Chair Arthur Burns faced heavy political pressure to keep rates low heading into an election. He obliged. Rates stayed low, even as inflation was already building underneath the economy. What followed is well documented. Inflation climbed into the double digits by the late 1970s, and it took years of painfully high rates to bring it back down. That's not a prediction about today. It's the historical case study every Fed economist studies before making this exact decision. Lower rates too early for the wrong reasons, and the bill doesn't disappear. It just arrives later, bigger. The independent structure exists specifically because this has happened before. System number 3, your wallet's exposure. Whatever happens at the top flows straight down to 4 things almost everyone has. Credit card rates are tied almost directly to the Fed's rate. A cut or hike shows up on your statement within a billing cycle or two. Mortgage rates move more indirectly through investor expectations, but they react fast the moment the Fed's direction changes. Auto loans sit somewhere in between, quicker than mortgages, slower than credit cards. And savings accounts move too, just in the opposite direction. Lower Fed rates usually mean lower yield on the cash sitting in your bank. Run the math on a $400,000 mortgage. A 1% rate difference adds up to roughly $95,000 over the life of the loan. That's not abstract policy. That's a real number sitting on your own paperwork. Stack it. The Independence Firewall exists because rate decisions used to bend to political pressure, and that pressure has a documented cost. The 1970s aren't a prediction of what happens next. They're the reason the current structure was built the way it was. And whichever direction rates move, and for whatever reason, the effect doesn't stay in Washington. It shows up on your credit card statement within weeks, your mortgage rate within days, and your savings yield almost immediately. This video isn't telling you whether the Fed should cut rates or whether the president is right to push for it. It's showing you that the fight itself, regardless of who wins it, is not abstract. It's sitting in your mailbox either way. Here's the fix. 3 things worth doing before this settles one way or another. Rule 1. Don't assume rates only move in one direction. Model your own budget at both a higher and a lower rate scenario, especially if you're planning a big purchase soon. Rule 2. Watch what actually comes out of Jackson Hole this week. Not the headlines about it, the actual policy language. That's the real signal, not the noise around it. Rule 3. If you're deciding between a fixed and adjustable rate on anything, this exact fight is the reason that decision matters more than usual right now. Know the mechanism, then form your own opinion on the politics. I built a free spreadsheet, the Interest Rate Impact Calculator. Plug in your mortgage, credit card, or auto loan balance, and it shows you exactly what a rate move in either direction actually costs or saves you.
Link is below. Subscribe for more.